Ever dreamed of owning a piece of those towering buildings in Makati or BGC? For most, that seemed impossible until now. Buying a whole building cost billions, but with REITs, real estate investment trusts, you can own a slice for less than a fancy coffee. REITs let you invest in a portfolio of income-generating properties like malls and offices by buying shares on the stock market. When you buy a REIT share, you become a part owner. No need to manage tenants or fix anything. By law, REITs must pay out at least 90% of their net income as dividends, making it a true passive income stream. More Filipinos are turning to REITs for accessible, diversified, and hassle-free real estate investing. Instead of the risks and responsibilities of owning a condo, REITs offer a modern, flexible way to earn from prime properties. It's real estate investing, democratized for everyone. For many Filipinos, owning a condo has long been the ultimate status symbol, a tangible asset and a legacy. The classic dream: buy a unit, rent it out, and watch its value grow. But in 2025, the reality is tougher. Rental competition is fierce. Vacancies are common, and managing tenants is a full-time job. High upfront costs and ongoing expenses can drain your cash flow, especially if your unit sits empty. While condos can offer big rewards, they come with big risks and lots of work. More investors are now questioning if the traditional condo path is still the best way to build wealth. The dream is alive, but it's facing serious competition from easier, more liquid alternatives. Is the hands-on condo route still worth it? Or is it time to look elsewhere? How do you actually make money? With REITs, it's all about quarterly dividends, your share of the rent from dozens of prime properties. These payouts are stable thanks to professional management and big-name tenants and are required by law. With a condo, your income is monthly rent, great if you have a good tenant, but risky if your unit is vacant. Every empty month means lost income and ongoing expenses. For example, invest ERE IE 500, zero in a REIT with a 6% yield, and you could earn ERA 30, zero a year, paid quarterly, no stress, no vacancies. The same amount as a condo down payment might get you a unit, but after mortgage, dues, and repairs, your net income could be much lower, especially if you face vacancies. REITs spread risk across many properties, while a condo puts all your eggs in one basket. The potential for higher gross income is there with condos, but REITs offer more stability and true passive income. For most, the reliable, hands-off dividends from REITs are hard to beat. Which income stream fits your lifestyle? Beyond income, investors want their assets to grow in value, capital appreciation. With condos, your gain depends on your unit's location and building, and market trends. One great pick can pay off, but it's risky and localized. A new development nearby can boost your value, but competition or a downturn can hurt it just as fast. REITs, on the other hand, grow as the value of their entire property portfolio rises, or as they acquire new high-earning assets. Their share price reflects the performance of dozens of properties, not just one. This diversification smooths out risks. If one area dips, another might rise. Condo appreciation can be explosive, but REITs offer steadier, more predictable growth. With REITs, you're betting on the whole real estate sector, not just one address. Which growth story matches your risk appetite? Liquidity. How fast can you turn your investment into cash? With REITs, it's as easy as selling a stock. Need money? Sell any amount of your REIT shares and get your cash in days. With condos, selling is slow and complicated. Finding a buyer, paperwork, and hefty taxes can take months. You can't sell just a part of your condo. It's all or nothing. Plus, transaction costs can eat up 10% or more of your sale price. Your money is locked up, and emergencies can leave you cash poor. For flexibility and quick access to your funds, REITs are the clear winner. Liquidity matters, especially when life throws you a curveball. Meet Reena, a 30-year-old marketing manager who wanted to invest in real estate but didn't have millions. She started putting RE5, $0 a month, into a top REIT, buying shares regularly, practicing peso cost averaging. As share prices fluctuated, she bought more when prices dipped and fewer when they rose, lowering her risk. Every quarter, dividends landed in her account, small at first, but growing as she accumulated shares. After 3 years, Reena's Tayman 180, zero investment had grown in value, plus she'd earned thousands in dividends, no hassle, no tenants. When her brother needed tuition money, she simply sold a portion of her shares and got cash in days. She didn't have to sell everything, just what she needed. Reenas Story shows how REITs make real estate investing accessible, flexible, and stress-free. No property headaches, just steady growth and income. That's the power of REITs for ordinary Filipinos. Now, meet Carlo, who chose the traditional condo route. He saved up 600, zero for a down payment, and took out a big loan for a 1-bedroom unit. After spending more to furnish it, he struggled to find tenants, paying mortgage and dues out of pocket for months. When he finally rented it out, the rent barely covered his costs. Vacancies, repairs, and tenant turnover ate into his profits, and managing the property took time and energy. After 3 years, his condo had appreciated, but selling it would mean more taxes and fees. Most of his wealth was tied up in the property, with little cash flow and lots of stress. Carlo owned a valuable asset, but it came with headaches and unexpected costs. His experience highlights the hands-on nature of direct property ownership. Is the traditional path worth the hassle? It's easy to focus on profits, but smart investors count the costs and hassles. With condos, expenses pile up: transfer taxes, furnishing, monthly dues, property taxes, and constant maintenance. Even with a property manager, fees eat into your income. Tenant issues, late payments, repairs, turnovers turn passive income into active work. REITs, in contrast, have minimal transaction costs and no ongoing expenses for you. No repairs, no tenants, no property taxes, just buy, hold, and collect dividends. Professional managers handle everything behind the scenes. REITs offer true passive investing, freeing you from landlord headaches. Simplicity is their biggest advantage. So, which investment is right for you in 2025? It depends on your capital, risk tolerance, and how hands-on you want to be. Condos suit those with big capital, patience, and a willingness to manage property and tenants. They offer potential for high appreciation, but come with high costs and effort. REITs are perfect for those seeking passive income, liquidity, and diversification, starting with just a few thousand pesos. For most Filipinos, REITs are the more accessible, less stressful, and more flexible path to real estate wealth. They democratize property investing, letting anyone own a piece of the country's best buildings. The traditional condo dream still appeals to some, but REITs are the practical choice for the modern investor. The real question: which investment fits the life you want to live?